Hello everybody, welcome to another episode of Erickson TV, courtesy with Lauren. Hello Lauren.
Hey everybody.
Hey Lauren, I understand we're going to talk a little bit about stock picking.
That's right, stock picking.
And before we get to the contest you're going to talk about, I just wanted to maybe just get a basic definition of what stock picking is.
Oh right, yeah. So stock picking is, instead of owning the entire market, which you can easily do, you try to pick 1 or 2 or 5 or 20 stocks that you think are going to do better than the market as a whole.
Okay.
And you do a lot of research. You try to figure out which stocks are being ignored, which ones have great prospects, all of this kind of thing.
And I do know that when you watch most of the financial news media, like the Fox Business and the CNBC for Business and the Jim Cramer show,
right.
Mad Money, those are all about stock picking.
Yes, exactly. Most of the time, if you watch a financial media, that's what they're talking about. They're talking about stock picking, stock picking, stock
picking.
picking.
And then I know some clients think, well, I'm buying mutual funds and I'm not stock picking, but I do believe that that's not always correct, because a lot of managers are active managers within those funds and they're actively picking stocks in the funds.
Right, exactly. And in fact, one of them was in this contest. They had a contest between 5 teams of stock pickers to try to see who would do better. One was a wealth manager at a private financial advisory firm. Another one was a stockbroker that you would normally see. Another one was a mutual fund manager. Okay. So that was his job, to pick stocks for a mutual fund. And then another group was students from in finance at a university. Okay. And then the 5th person was Orlando the cat.
Orlando the cat.
Yeah. And then the cat was an orange cat. That's
how does a cat pick stocks?
Well, they give the cat a toy, and then he flicks it onto a grid of numbers, and wherever the toy lands, those are the stocks Orlando wants. Okay. So at first, the professionals seemed to be doing pretty good, but by the end of the year, Orlando beat all of them. Orlando beat the wealth manager, the finance students, everybody.
Okay.
And what's really bad is that if you combine the professionals, so-called professionals totals, their stock picking prowess, they made 3.5% last year.
Wow.
Orlando made 10.9%. And at first that sounds pretty good, he made 10.9%. And real quick, I'm going to say they each could choose 5 stocks, and they could switch them every 3 months.
Okay.
But here's the thing: a global portfolio of international stocks last year made 19%. So we have the pros making 3.5%, which is terrible.
Right.
We have a cat doing much better than the pros, making 11%. And if you had passively invested, not tried to pick any stocks, didn't do any research, just picked a diversified global portfolio of stocks, you could have made 19%. So it's not just that these stock pickers didn't do well, they really didn't do well. Now, of course, by sheer blind luck, they could have also done really quite well, but it didn't happen this way. And so what I have to say to anybody out there is, not only was the cat smarter than stock pickers, but Curtis and I, we're smarter than the cat.
Oh, there you go.
Yeah. So that's something we can be proud of, that we can do better than a cat flinging a toy at grids of numbers.
That's very good. So if you are in that situation where you're not sure how your portfolio is being invested, or if you are actively picking stocks
and being outdone by cats,
please give Lauren or myself a call, and we'll be glad to give you an analysis of kind of an MRI in your portfolio and see if you can do better. Thank you very much for watching this episode of Erickson TV, and we'll see you next time. Bye.
See you next time.